It's Wednesday, the 12th of June, 2024. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories, 5 minutes. Let's go. Story number 1. Australia's financial regulators have warned that the share of borrowers falling behind on mortgage payments has continued to rise as interest rates, of course, remain at decade-long highs.
The increase in financial hardship applications is also rising, though they are coming off very low levels, according to the Council of Financial Regulators. In its quarterly statement, the council said most borrowers have continued to meet their debt repayments, but the fact that they mention there's been a rise in borrowers falling behind is clear that they're a bit worried about it. The council is made up of the Reserve Bank of Australia, the Australian Securities and Investments Commission, the Australian Prudential Regulation Authority and Treasury. It also commented on lending to commercial real estate, not too worried about that. It said bank exposures are relatively low, in part thanks to conservative lending practices. Also, relatively strong financial positions of commercial property owners means it's not too much to worry about, Michael.
Sean, the report, I'm particularly interested in this part. The report also talked about the problems in the cash delivery sector, where the near monopoly operator Armaguard has been calling for assistance because sending trucks around the country is just proving to be uneconomic.
It's a major challenge for the big banks, Aussie Post, Reserve Bank, anyone really who accepts cash. In 2010, around 60% of purchases were made in cash. Today, it's closer to 10%. It just isn't economic to deliver it in those big Armaguard trucks anymore. This is a problem that's been going on for months, and the Council of Financial Regulators said it's working to ensure sustainable arrangements for cash distribution. Now, there's something called the Working Group on the Future of Cash Distribution. The Reserve Bank chairs it. Minutes from the last meeting show that the group is developing a new model to deliver cash. No idea what that might be, but it looks like the option of having a big private company with those big trucks delivering cash and not being supported by the government or banks is no longer any good.
Sean, moving on to story number 2 now. Private equity group Bain Capital has made a $1.83 billion bid for Bapcor, the automotive parts retailer that owns Autobarn.
It also owns the Auto Pro, Burson and Midas chains and has 1,100 outlets selling car parts to mechanics and fans of motoring. The unsolicited conditional bid of $5.40 a share is a 24% premium to the group's share price when it closed last Friday. Pretty good, but well below the $7 or so that Bapcor was fetching late last year. The group has downgraded its earnings outlook 3 times in the last year, most recently in May when its disclosure sent its share price down 35% in a day. That is a shocker. The group's been hit by the downturn in consumer confidence as well as a bunch of management changes. So it's now being offered the $5.40, much higher than it was, nowhere near what it was a couple of months ago.
Story number 3, Sean. Business confidence and investment has really been one of the shining lights in the economy, but sentiment has turned negative and trading conditions and profitability have been weakening.
Yes, business confidence is now negative and below the long-run average, with retail, recreation and personal services and wholesale businesses all in the red. Confidence in finance, business and property as a group remains positive. Business conditions, as opposed to confidence, has also slipped below the long-run average, with forward orders deeply negative in retail, wholesale and construction. Many companies in those sectors just don't have a full calendar of work, basically. The National Australia Bank May Business Survey shows that the slowdown demonstrated in last week's March quarter economic growth data has continued into the current quarter. Not so good. It also gives us some information on the inflation front. As NAB Chief Economist Alan Oster said, it suggests that inflation will continue to moderate. That's good, but only gradually from here. Not so good.
Story number 4, Apple has taken the wraps off its long-awaited new artificial intelligence features for its devices, and it seems like the response was a little underwhelming.
The centerpiece is a partnership with ChatGPT maker OpenAI on a new AI platform called Apple Intelligence. The group's worldwide developers conference also included updates to the iPhone maker's operating systems. The AI technology will be available in smartphones and will help summarize text, create original messages, and retrieve the most relevant data when users need it. According to Apple, the push also includes a revamped version of Siri. The partnership with OpenAI will let customers access ChatGPT via Siri at no extra cost. Apple Intelligence will begin rolling out later this year, but some features, including some of those Siri features, won't come until next year.
All right, last one, Sean. Story number 5. Singapore Airlines has offered $10,000 in compensation to passengers who sustained minor injuries during a flight that hit extreme turbulence last month.
The airline has also offered to individually discuss compensation for those who sustained more serious injuries. Those recovering from serious injury have been offered an advance payment of $25,000 to address their immediate needs. The airline also apologised for what it called a traumatic experience on board flight SQ321 last month. Of course, a 73-year-old British man died in the event. Several dozen of the 229 passengers and crew on board were severely hurt, ranging from spinal to skull injuries.
All right, there we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 12th of June, 2024. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed, wherever you listen to podcasts, or at fearandgreed.com.au, which is also where you can sign up for our free weekly newsletter, which comes out today. So you better jump in quick. Also out today is the new episode of How Do They Afford That, our sister podcast, all about making your money work harder for you. This week's episode, all about the top 10 financial mistakes to avoid in your 20s and 30s. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.